let's get more now with Craig Erlam, Senior Market Analyst at OANDA in London. Great to have you back with us, Craig. Now, we're seeing a strong start to the week on global equities. Can you tell us more about what's lifting the mood right now?
Yeah, it's kind of been a bit of a follow-through from last week, really. Late on Friday, we seem to have some positive results from Gilead regarding remdesivir, and that lifted US markets into the end of the session. It was still quite a small study, and we've got to remember that this isn't a vaccine, but it seems to be any of these results that come positive do seem to give a lift to these equity markets. Broadly speaking, though, we're still in very choppy waters. Remembering just a week ago, we had a very strong start to the week. The media reports in China about encouraging people to buy Chinese stocks, talking about them offering great value, gave stock markets a big lift at the start of the week. That carried through most of the week in China, but the rest of the world, it very much fizzled out, and we continued to see this choppy trading. I'm seeing no evidence really that we're going to see too great a difference today, if I'm honest. The big difference this week, of course, is that we do have earnings season, so there is the prospect for investors to be buoyed by whatever it is corporate America has to say.
Yes, can you tell us more about what we might expect from earnings season this week? Obviously, the start of a new quarter, new season. Are we expecting good news on the corporate front?
Well, we have to remember the second quarter is going to be pretty dreadful as far as corporates are concerned. Obviously, this is when we had the shutdown in the US and around the rest of the world. So the results themselves are going to be pretty catastrophic, maybe 30-40% revenue declines. But I think we also have to focus on the aspect which is going to be investors' response to this. And what we've seen over the past 4 months is that investors are very forgiving of quite dreadful numbers because they've already factored in the fact that these numbers are going to be just that. They're going to be a lot more focused on the outlook. Now, most corporates last time did refuse to effectively give their assessment of the outlook because it was still the early stages of the coronavirus and it was so clouded with uncertainty that they preferred not to offer an outlook. Investors, again, were very forgiving about this. They may not be quite so forgiving this time around, so I think that's going to be key on this occasion. What we've seen so far from America is that the economy has rebounded faster than we expected. Unemployment has dropped more rapidly than we've expected as well. The flip side to that is we've also had a spike in cases across many states at this point. So the risk of lockdowns and the risk of a stalling of the reopening process is likely to be the downside risk for many of these profit forecasts as well. So I think that's going to be the key aspect. I think the most important thing here, though, and we've seen this plenty of times before, the bar is going to be very low for this earnings season. So don't be surprised to see some dreadful results and stock markets on the rise again.
Okay, Craig Erlam from OANDA in London, thanks so much again for your time.